Welcome back to Total Money Management, the Signals and Noise podcast.
I was watching your finger on the recorded button and you go, all right, I've gathered my thoughts now.
I think that was. Is it Signals and Noise? Okay, it's a lot. Weekending October 10.
Yes.
How are we doing, gentlemen?
I'm good.
Broncos!
Yes. It's World Mental Health Day today.
Is it?
Yeah.
Well, that's why we're having a red wine. It's good for your health.
So look after
Not
yourself.
advice.
Look after yourself. Money is stressful, so talk to your pals.
Now, come and talk to us.
Yeah, but otherwise, good, mate. What about you?
Exceptional.
Do you want to talk about your mishap today?
Yeah.
No?
Let's move on.
How's your driving, mate? What about you, Jacob? Have you ever suffered any licence problems?
Never. Not
Never.
once.
Oh,
Never.
that's good, isn't it?
Yeah. I haven't given any money to...
Truth in marriage is always key to a good relationship.
I have all my points.
No good behaviour.
Never give any money.
Not on good behaviour either.
Right.
That turned on me.
Moving right there. That was bad. That was a bad blow.
Yeah,
bit of blowback on that one, buddy.
The problem is we sat here too long before hitting record.
Yeah.
Just had a little bit too much.
Right.
Anyway, starting
what
off
have we
with
got?
something
What have we
very
got?
important.
Very important. This is very important. I've decided to make that a new title.
What's so important, mate?
Mate, the most important thing is, oh God, I don't know. I'm sorry, folks.
Taco?
I'm going to have to apologise. Every week I'm coming on going, oh my God, it's getting worse.
He's a grown-up.
And it's getting worse. It's getting worse. I don't know how many times I can say how bad it's going to be.
Okay, it's Mental Health Day. Let's put a positive spin on it so we don't make everyone sad.
Okay, go short the NASDAQ.
You'll make lots of money.
I'm telling you, in 6 months' time, your mental health will be so much better because it's crazy out there.
We had someone on Instagram. Actually, I was walking in here saying, I'm sure it's not a targeted thing at us, but we were talking about AI on a previous podcast just on Instagram.
As you do.
Apparently, we lack some vision. We lack vision on AI. It's transformative tech.
Oh, I saw that comment, yeah.
I went back saying, look, we're not saying anything. Like, the tech itself will transform things. What we're saying is we're not going to invest in any of it right now.
And I've got doubts about transformation, but that's for another time. That is.
Yeah, but Jake and I use it so often.
Well, you exclusively work in tech. So
how much do you pay for it?
$20 a month.
You know how much it costs to build a data center?
Actually, I don't. Jacob does. I use his
Are we paying for ChatGPT?
No, I'm paying for it.
Well, now, you know how much it costs to build a data center? One gigawatt? 30 billion. You know how long it takes?
Oh, you'll get
2.5.
mate. Come talk to me.
Hey, 2.5 years. I'm telling you, it's ugly. It's going to end badly, right? But anyway, Mental Health Day, I'll have to be...
You lack vision, Steve.
Yeah.
All right, so, okay, let's change it around. Let's talk about the stock.
What's good?
Let's talk about the stock.
Which stock do you want to talk about?
The stock of the week. You got it there. Come on, we've got to mix it up a
let's
bit.
start from the end. Okay, so now everyone can
Start with the end in mind.
So everyone can just drop off after the first 5 minutes.
Yeah.
This is
No,
an
because
absolute
the
train
lesson
wreck.
of the week is really good this week too.
It is,
And we're going to talk about that at the end.
So the stock of the week is
Yes.
BHP. So before we get into it,
there you go.
we vote. The way you vote for this thing, because we're giving people messages, which is great, we love it. But we have a members channel on Instagram. It's free. Go to Instagram, join. There'll be a poll. And if your stock's not in there, send us a message and we'll add it. And you can vote that way. But BHP this week won with flying colours. Take it away.
Yeah. Well, we'll get to everybody's request.
Most people.
Over time, right?
We've had about 100 already.
Yeah, and if it goes up 85% in the interim, sorry about that.
We're currently in 2028 until we get the last one.
Yeah. But anyway, BHP. Look, if you remember what we did last week, folks, we did it with Woodside. We went through our criteria. We talked about, the category of stock and all that sort of stuff. So that is a really important part because that's our initial checklist. Yeah. And so then what we do is...
So let me read these out before you... So the 6 stock categories.
Yes.
Slow growers, stalwarts, fast growers, cyclicals, turnarounds, and asset plays.
Yes.
Where does BHP fit in that?
BHP would be... Now, that's a good question. I would argue that it's probably slow growers, but you could also argue that it's a cyclical because of, it's heavily tied to economic growth.
Yes.
Right? So here's the important bit too. Once you get a checklist, I did this BHP in probably, and I'm not kidding, it probably took me half an hour, right, to do the research. Now, the reason why is quite simple, because I've got a criteria there, and I just go into a trading platform or wherever and go, okay, dividend yield, right, okay, PE, right, okay, current ratio, right, okay, that's the numbers done, right? So BHP is a large cap, no-brainer, 218 billion, okay, everyone knows BHP. Right, the dividend's around 3.5, so that's below the market average, okay? You get 100% franking.
What's the average at the minute, sorry?
Well, in what dividend?
Yeah.
The dividend average at the moment, I think, is about 4, maybe 4.2.
Yeah.
So it's below the average. But that's the gross dividend. So it ends up being around 2.7. You've got 100% franking, right? Now, dividend stability is 91%. Now, what that means is, does it continue to pay a dividend, right? So that's good. A higher than average earnings yield, 8%. Okay, that's not too bad, right? A modest PE ratio, 13.6. Okay, the company average is 15. So it's a little bit cheap. The book value is around 15. So the current price is about $42. So that's about three times book value. Little bit high, but I don't think with companies like BHP, I don't think book value's really as important. Right?
Why is that?
Well, generally, Tom, because it's just so goddamn big for a start. But it's also too, the book value changes a lot with mining companies depending on what they discover, right? So the book value can go up a lot. BHP is in copper, iron ore, nickel, uranium, gold, silver. It's a really diversified miner. I personally think, well, let me finish this a little bit. Competitive advantage. Not really, but it's big, right?
And it's old.
And it's
longevity.
Yes, it's one of the big three, right? There's BHP, Rio, and Vale in Brazil, right? Okay, modest debt exposure. Okay, current ratio 1.46. Okay, that's good. Broadly negative media. Now, my argument would be yes, or somewhat, since this week China, I think it was this week, China said, right, stop the stuff with BHP.
Yeah, that was last week.
Right?
Yeah.
Last week, right. So that has put a negative spin on BHP. Okay, recent price decline. Prior 12 months, in 12 months it's gone nowhere. Okay? The prior 10 years, it's gone from $20 in about 2025 to the current price of 42. However, in 2016, it was as low as $13, right? About $13.50. So you'd have made a lot more. I bought BHP, if I remember correctly, I think it was for about 12 after the GFC, and I think I sold it for about 26. Overall, it's not screamingly cheap on a range of metrics. The dividend's below average. Large cap stock is pretty low risk. So it would fit in that sort of, I'll just stick it in there and get a dividend and probably get a bit of capital growth.
Yeah.
But I think it will do well over the next decade because I think commodities will do well. The other thing is too, what I think, and this is a broader statement, I think where you'll do well in commodities is in the more specialty type of metals, like the rare earths, copper. There's plenty of iron ore around, but the really important thing, and we're going to talk about this later, is rare earths are now becoming an absolute weapon in national policy, right? This week China said, right, we're stopping exports. And, I'm not exaggerating, that's an act of war. Right, because they know the world is generally relying on them. So this is basically saying, right, we're going to hold your hand to the fire by saying we're not going to do rare earths, right? So this is why I'm saying to people, this is really, really seriously stuff. you know, the world is really changing and it's getting a lot more hostile.
Well, one of the criteria, so numbers versus narrative is something that we teach.
Yep.
One of the criteria that we look at, which I'm not sure we covered in this talk anyway, is what's the sector doing in general? And the commodities sector has been struggling for a while.
Absolutely,
and
a decade.
Yeah, and BHP, so you look at that, you kind of go macro to micro in the way we look at things. And the sector's the main thing. What's the sector doing before I look at the stock in the sector? And although BHP's not screamingly cheap, the sector overall is really reasonable. So if you're looking at that, and it's more like a trampoline. If the sector starts to take off, BHP being one of the main guys in the sector will probably
take off.
As well.
Yeah. They're big, old, ton of experience. I don't think it's going to be $80 in 5 years, but
what would you give it out of 10?
Sorry?
What would you give it out of 10?
Oh, I would say 7.
7
but
out
it would
of 10.
be mostly based on safety, pays a dividend. My argument would be
It's just quite a low dividend.
yeah, but my argument also too, Tom, is a bit of the Buffett stuff, right? Do you want Woodside at 8 with a PE of 10, really undervalued, or do you want BHP with a dividend of 3.5 and not as cheap? And so the Buffett argument is, well, why are you investing in BHP if you've got Woodside that's like crazy cheap? Put more money in Woodside, right? And that's a good argument, but I'm just saying in every investment, you've got to look at it and say, okay, what are my alternatives, right? And this is where we talk about the equity risk premium, right? If I can get 5 in bonds, well, listen, Tom, I want 9 from stocks if I'm going to take a risk of losing my money.
Yeah, 100%.
Right? If I say to you, oh, Tom, I'll give you 6, you go, dude, I can get 5 in bonds. I'm risking all my money for 1%? Nah, I don't think so. So that's where you look at it and say, okay, BHP, good, big, safe, solid, but are there other things that are big, safe, solid, and a lot cheaper? And there is, right? In the commodity space as well.
Yep.
Okay.
Good. Hopefully that helps people. It's obviously a new segment, so if there's something you want reviewed, send it through. But we're trying to help people understand how we think about when we're looking at buying stocks. What are we looking for?
Yeah.
Without giving advice.
The other thing is too, we predominantly have ETF strategies, but over the next decade, and I'll try and keep this short, passive investing in the market has been an absolute winner for the last 15 years, right? All you do is you just buy the S&P 500 and it just goes up.
Yeah.
Right? So since 2009, it's up about 450%. The NASDAQ's killed it. Whereas those people who pick stocks haven't done that well unless they've been in the Mag 7 or, the big ones of the day, information technology, right?
Yeah.
So what I'm saying, in the next decade, you're going to have to be a little bit more selective about where you invest, because with the CAPE ratio at 40 in the US, that market will fall.
Yeah, don't expect the index to be giving you 20 points.
That's exactly right.
Yeah.
But you might get it in gold, right?
Yeah.
Or you might get it in oil.
Or Linus.
Exactly right. Right?
He named
Your
dropping there,
Linus.
Tom.
Not advice.
Let's talk
Interesting question, Tom.
What's happened to Linus?
Yeah.
recently?
Wait, is that another Steve told you so to the members?
Well, just saying.
What has it done? What has it done?
$8 to 20. You tell me.
In what
You
time
tell
frame?
me.
So when did we talk about Linus?
We talked about Linus in May,
and it was $8.
That's not quick enough.
and it was $7.
That's not quick enough.
It's quick enough for me, mate. Guess what? I bought it at 45 cents.
Guess what? You spoke about a few of them, and I bought something else that hasn't moved. Then Linus.
Well, take your pick. I said Linus. I said Australian Strategic Metals. They've gone from, I think, 45 to about 60 cents. I said Northern Minerals. They've gone from 3 cents to 4 cents. Right, 75%. I said
that's 25%.
I said, yes, you're right.
Let him have his math.
I said the ETF, rare earth ETF, has gone up about 40%. So, getting the vibe here.
Mm-hmm. The Oracle.
Yeah.
And we've been talking about it for a while. Now, but in all seriousness,
Not advice.
the reason why that's important is because we've got a macro overview, which is, and I know people go, oh my God, they're talking geopolitics again. This is why it's important, right? Because Donald Trump invested in a thing called Trinity Metals, I think, in Canada, right? Stock price goes up 45%, right? When Trump says we're going to invest in X, the stock price goes through the roof. That's why I've been saying that's really important, right? Because what's happening is the world is changing rapidly. And what I'm noticing is a lot of economists are saying things like, this week it's Trump bailing out Argentina, right, with $20 billion. And people are going, oh my God, that's stupid, and they're selling. People have got no idea. Now now the US has got a stranglehold over Argentina. Yeah. You guys owe us $20 billion. Yeah. And you guys have got beef, rare earths, minerals, metals, and guess what? That's all what you should be giving to us now.
That's how you repay the debt.
Absolutely.
He's been busy. He also ended all wars.
All past, present, and future wars are ended by Mr. Trump.
You got to throw him the peace.
He's the best.
You got to throw him the peace prize, haven't you?
He's the best.
Oh, piece of shit.
You know what I reckon's going to happen? They give him the peace prize, and then all hell breaks out.
Yeah, because
Got
it's
it.
all patchwork.
Finally got it.
Oh, well, we've got a piece here in Signals and Noise in the newsletter about the S&P. We talked about it week on week. Look, we're probably expecting a bit of it will hold or have a decent run into Christmas. Usually the market does over this time. So it's more retail sentiment. There's more retail investors in the S&P now than ever before. And generally it has a bit of a run in throughout to Christmas, kind of December, January.
I think so, yeah.
But there's not much else other than it's crazy batshit expensive.
Yep.
Short.
I'm really concerned about next year. I reckon next year is the one where you're going to have to be super duper careful. I really do.
2026.
Look, I can tell you guys, I've been at this for probably 25 years, and I'm deadly serious. I've never seen anything like this.
That's when the cycle's meant to end, isn't it?
Yeah, but see, Jacob, what's Bitcoin now? 120.
It's back up at 120, I think.
Right.
It was 109 last week.
But that's what I mean, right? But here's the other thing: gold is at 4,000, right? Silver's, they're talking about gold getting to 10,000. Silver is booming, right? The Mag 7 is booming, right? Everything's booming. Now, my argument is, okay, if you say imagine there's two investments, right? Stocks and gold. And you say, I want to buy some gold. Well, generally what you do is sell some stocks to give you the cash to buy gold.
But the money printer's gone, Steve.
Well,
so
yeah, but that's
both.
Yeah, but that's what I'm saying. You're looking at it going, hang on, if everything is going up, then there must be more money coming into the system, right? Where is that coming from? Generally, it's coming from government deficits.
Or Tom's wage.
But there must be. Yeah, but the wage rises are okay. They're not great.
They're not
so,
great.
Other than Tom's, of course. Because he's in tech. He's in tech, bro.
They're not great.
He's in tech, bro. And Tom's poorer now by a few bucks with that.
With the mishap.
With that road incident. But the point being that
Mental Health Day.
Yeah, everyone else's, not yours.
Yeah.
Sorry, mate.
Mate, when you got kids, there's no mental health day. Yeah. Every day's a nightmare, right?
Hey.
It never fails. Every week I say to the kids, I'm doing a podcast. My daughter writes to me, right? What time are you going to be home? It's like, darling, I'm in the middle of a podcast.
Same as every week.
Right? Kids just don't care.
Amazing.
They don't care.
She
right?
won't care.
Anyway,
so
you
much.
get me off track. You're throwing me off track. What I'm saying is everything being expensive, you have to look at it and say and this is why I'm looking at commodities going, my God, they're so cheap. They're the only thing that's really hated, right? Oil's still at like $62 a barrel, right? But everything else is going through the roof, and you have to say where the money's coming from. And my investigations there's two things going. One is, after being at this for 25 years, I know that at the top of the bubble, which is where I think we are very close to, there's a shitload of fraud and bad debt management going on, right? It always ends badly with money. And that's I can tell you, because we're going to talk about it in a month or two, right? Because I want to give people a picture to say, look, it's not as rosy as you think it is, right? And even I was going, oh, like the US is like doing really well, and blah blah blah. When I've dug deeper, I've gone, oh, okay. Now I'm starting to see what's going on, right? That's why I'm saying there's a lot of fraud going on, but there's a lot of stuff going on. Just for example, right? US auto loans. Oh, you can't pay the loan. All right. Well, look, we won't foreclose or default on you. What we'll do is you just keep driving the car, and we'll just say that you've done a PIK, which is a payment in kind, which is saying you owe us $1,000 for September. Look, we'll just tack it on the loan, and you don't have to pay anything.
Roll it on the end.
We'll just roll it on the end, right? But we will call it payment in kind. So what you do is you look at it, you go, well, look, the auto industry's doing all right. The default rate's really low, and it's low because they're not triggering the default.
That's GFC all over again.
Exactly, but it's even worse because here we are another 16 years down the track, and everything's gone crazy. Right, and that's why I'm saying, look, as I said, I don't want to be a dampener, but I've got to, I think, deliver reality to say to people, listen, don't think that this is going to go on forever, because it doesn't.
I mean, I am starting to see some sentiment change now, just on socials and whatever newsletters we subscribe to and read all the time. 12 months ago, it was this thing's never going to end. And now there's a few people saying, oh, it's a bit expensive.
There's a few more people starting to speak up now. Yeah. Like that article that you put in the Signals and Noise newsletter.
Good job, Tom.
Paul Tudor Jones.
Yep.
Legend.
The dude who called the 1987 crash pretty publicly now reckons, market's prime for one last melt up.
Yes.
So,
and he's been at it longer than I have.
Paul Tudor, he's an absolute legend of the game.
Yeah. He's the one who said nothing good ever happens under the 200-day moving average. That's right. We brought technicals in, right? Remember, we brought it in because CAPE is good, but CAPE's no good if you say, Steve, what happens in the next 10 months? And I go, I don't know.
Yeah.
But what you can do, and what I recommend people do, is keep your eye on the 200-day moving average, right? For that reason, if it hits the 200-day, you might want to rebalance. Because, as Paul Tudor Jones said, nothing good happens below the 200-day, right?
Yeah.
So if the CAPE is at 10, I'm saying, okay, don't worry about it, right? Because you've got a huge runway, right? Yeah. If the CAPE's at 40, I'm saying, listen, this could be the one, right? And as Nassim Taleb said, there's nothing wrong with being paranoid, because if you're wrong 100 times, you still don't get hurt. If you ignore it once, it can wipe you out.
Yeah.
And that's a really, really important point, right? It doesn't matter if I keep going and people keep going, oh, ha, ha, you're wrong, oh, ha, ha, you're wrong. Then if I'm right and they lose 60% and I go, ha, ha, now I'm right, right? That's really what it's about.
That's what gets you out of bed.
I'm a spoiled bastard like
Which
that.
you will definitely do.
Revenge all the way, right? Revenge all the way. Shout out to all those Storm supporters too. Yeah,
a lot of people probably don't realize. Probably don't realize how exposed they are. Like their super is probably 98% in stocks.
Absolutely.
When was the last time you looked at your super?
And they're all making money, Tom, because they're in the US market in the Mag 7.
Yeah.
So you read up your stock returns, super returns, and go, oh, we've made 17%. You go, great. And what you don't realise is you're a share owner in NVIDIA.
Yeah. You're 1% in Australian real estate. You're 2% in Australian stocks. You're 95% US stocks.
Yeah.
Okay.
Yep.
What's happening back home? The Aussie economy obviously is still teetering along, not doing much.
See that picture on the right-hand side? Average income needed to afford. Every time, folks, when we write about stocks on the socials, can you comment on those?
Yeah, stop.
I write about stocks and crickets. I put up something about property. We get 8,000 comments.
Yeah. Oh, it's seriously, we may as well turn into another property podcast. Because that's all people care about.
Oh, God. Dan, edit that bit out. For God's sake.
Well, That's all people care about.
Oh, no, that's all they talk about.
Yeah. Like
That's all they talk about now.
Yeah, but if you've made squillions off property, you're probably going to talk about it as well.
Well, yes, that's
You
true.
know.
That's true, Tom.
Basically, it's still
Linus.
batshit crazy,
Yeah.
but
Right, Linus?
it's still batshit. Property's still batshit crazy. 2026, who knows? But in Brisbane, you need almost 180 grand to afford a property. So if you're not hooked up with someone, go and find a partner or ask Tom for
A loan.
a bit of a loan.
Marry someone rich.
Yeah, yeah.
But it is. I mean, I can't figure out how they're lending money.
Sorry.
Jeez, he's on a roll tonight, isn't he?
Oh,
Hey,
God.
he's on a roll. I can't figure out how. And I must admit, I had two real estate people explain it to me today about the 5%. Did I say something funny, or was it just you guys sharing a private joke?
No, I've cracked myself up on my own joke.
Oh, Jesus, you wouldn't be a very good comedian. Yeah, the thing is, I still can't understand how the 5%, but because my argument is, well, hang on, yeah, you can have the 50 grand, but you won't be able to service the 900.
Yeah.
But he said to me, which made complete sense, he said, yeah, but Steve, there's a lot of people out there who earn 250 or 300 as a couple, but they've got the 50, but they haven't got the 20% deposit.
Yeah.
So they're the people who say, well, we can afford 7 grand a month and we've got the 50 grand.
There's a lot of people in that.
And that's when I sort of went, oh, okay, now I get more, I understand it more.
Yeah.
But it's still, now they're talking about 40-year loans and
It's
the
like I said
payments
last-
are just, Jesus.
Like you said last week.
Like you said, the market's gone nuts for so long. There's a lot of money flowing around. There's a heap of people who can afford it, but more and more people are getting priced out of it. It's still ridiculous.
Yes.
The whole thing's ridiculous.
Yes.
Like I said last week, I'm not sure what the number is now, but there was 115,000 people apply for that first 5% scheme thing on day one, and there's a lot of couples out there that can actually afford it, and so the price is going to go. A house that was 900 will now magically be $1 million.
Yes.
And
Well, I think that's already started. I saw a few things on Twitter where it was basically, and I got to admit, it's a bit hearsay, people saying, oh, Bill wanted $1 million, now he wants 1.2 or something. But people are doing that, particularly at that range,
Well,
because that's the
cap's
range.
$1 million.
Yeah, that's where it goes from $899 to $950 or $990 and stuff.
Yeah.
So anyway, shall we talk about the lesson of the week?
Let's do it.
Righto. What I wanted to point out here is and I'm probably repeating myself here, but when every point in your investment journey, you want to ask yourself, what am I going to get for my money, right? What's the expected return? If you invest when the CAPE is 10, you'll probably do really well. If you invest when the CAPE is 40, you probably won't do so well, right? Now, and again, we've mentioned this in the earnings yield. The diagram we've got there is basically showing you a sort of template for asset allocation, right? So if you started off, let's say it's 2009, right? And you've got 100 grand and you go, I'm going to invest in stocks. I don't know what I'm doing, right? So you invest 100 grand. Now, by now you've probably got 1, 2, 4, you've probably got about $500,000, right? Which is a lot from 100 for 16 years, right?
Of doing nothing.
But now the CAPE ratio is 40. So according to that diagram, what it's saying is, look, when the market is really, really, really expensive, you want to reduce your allocation down to 10%. So that means taking from 500, selling $450,000 worth and leaving 50,000 in the market, right? Now you've got 450 in cash. Now, I can guarantee you 99% of people will be unable to do that. Probably
more.
Yes.
Yeah.
Because it just seems like you're going to miss out, right? Like, oh man, I'm gonna have 50 grand in stocks, and if it goes up 10%, I get 5,000 instead of 50,000. But my point is, the at that point in time, you've got to look at what the value is, not say, I've made 400,000. You've got to say to yourself, well, if I had 500,000 now and I ran into Steve, Tom and Jacob.
Would I invest it?
Would I invest it at the Cape ratio 40? Steve, Tom and Jacob would go, dude, no. Just put 50 in just to give yourself an interest. But wait for it to crash, or listen, go and buy some gold, or go and buy some commodities, or, other stuff. And it's really, really important, because people look in the rearview mirror, and I had this myself, right? You buy a stock, the thing goes through the goddamn roof, and you really, really can't sell it, right? Even though you know it's overvalued, because you lose your bragging rights for a start, right? You don't get to say to people, that stock, it's up 400%. You have to go, oh yeah, I sold it. Mm-hmm. If it goes up, then people go, oh, you idiot, it's gone up another $1, right? There's all that sort of stuff going on. So, but the point also is, if you invest systematically and you invest with the principles, what you do is you get to understand that it works over time, right? Because if I said to you, listen, Tom, that 500 you've made, excellent, but in the next 6 months you'll lose 70%, you go, oh my God, Steve, I'm going to get out now. Because you would then go, oh my God, I could lose it all. Yep. But at the moment, when everything's selling crazy, people go, nah, mate, look, I'll sell 50 grand. Right? And then, of course, what happens is the market drops. If you don't have a systematic way of investing, the problem is you don't know where the top and the bottom is, right? Yeah. So, if and this is what happens a couple of times this cycle, where the Cape's gone from 33 to 23 during COVID, right? And people think it's cheap. Then they say, yeah, it's gone up, 70%. And it's like, I know that. But it still wasn't cheap at 23, and now here we are at 40, right? So if it falls, it's going to be really, really painful. And that's what I was saying before. That's what I'm concerned about.
Yeah.
Right? It's everything is bubbling, right? Yeah. I remember reading a book in 21, I think it was, The Everything Bubble. Yeah. Now, that was 4 years ago. Right, and from that 4 years ago, we've
bubble just got bigger.
Well, we've got Bitcoin, all-time high, gold all-time high, stocks all-time high, Nasdaq all-time high. Boom, 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 boom. It's gotten even worse. So that's where you start to get a bit fat and lazy and go, oh well, I'm just going to let it run.
But also, a correction is a major opportunity. Like if you've got 1,000 shares now, and like it represents, it's grown from. You might have paid $100,000 for those shares. They're now worth 500.
Yep.
And you sell 900 of those things.
Yep.
And you're holding the cash now. If it drops 60%, you might have 3,000 shares for the next run up.
Yes.
Yeah. As well as that, let's be logical, right? So let's use the 2021 example where it dropped, the Cape dropped to 23.
Yep.
According to dynamic allocation, we would have been about 40 to 50% invested anyway.
Yes.
So this is not saying take everything out and wait until it's okay for 7.
Yeah.
You manage your allocation depending on what the market's telling you, and if there's a bit of a crash, you're 40% or 50% invested anyway.
Yeah. That's the thing, Jacob, about managing your portfolio over time. What you find, a lot of criticism with Cape, which is really dumb and really cheap, is guys who go, oh, that means you'd have been out of stocks for this long. And it's like, no, you idiot. It just means your allocation might be smaller.
And
right?
your allocation changes. It could change every year or two.
Well, this is why I say, if you look at people like Warren Buffett, who, the old guy knows a thing or two, why is he so rich? He's so rich because he doesn't listen to idiots who go, oh, it's, you'd be out of the market for this. Buffett realizes that when things are really cheap, you buy a lot of it. Once it becomes expensive, like Apple, you get rid of a lot of it. And that's what he did, right? He sold down his Apple stocks. Why? Because it's really expensive, right? And what's he bought? He's bought the Japanese commodity houses, of which he's now made something like 55 billion, and he's bought Occidental Petroleum. It's lower than the price he originally bought it at, and he just keeps buying it, right? the old bugger knows what he's doing.
Yeah.
Right. And over time, he beats everybody. Right. I would have thought people would go, man, I better study that guy. Right. And as we say to people, it's not about the stocks he chooses. It's about the way he invests.
It's because it's boring. Like in this day and age, it's boring.
It's
People
not-
have an attention span of 30 seconds.
Yes.
It's not fast.
Yeah.
He's old.
Well, he reads. You know, he said he reads. He reads. He used to read 500 pages a day. He just sits down and reads annual reports, right? And that's what I mean. I know it myself. I've read so many books and articles and everything, and I'm not boasting. I'm just saying my knowledge retention now is like, yep, okay. And that's why you tend to make more money the older you get, because you've got more experience and you're able to go, I'm not investing in that garbage, right? Because you know that there's scams and frauds and, you know, pump and dump schemes and all that sort of stuff, right? And that's what Buffett knows. Buffett's got his way of investing. It works, and he's never veered off it for 85 years, right? I mean, you've got to admire him for, you know, a bloke that's just said, this is the way I do it for 85 years, not once going, I might have a little specky on, you know, so-and-so.
It keeps working.
Absolutely.
The best of all time.
Yep.
We're going to wrap it up there, gents.
All right.
Anything to close it with, Tom?
Couple of...
You got
anything?
I would just say thanks for listening. Please give us a stock. We'd love to hear the stock you want us to review next week.
Yep.
Please subscribe to the blog if you haven't. Please subscribe to the week that was if you haven't.
Please, please.
Just subscribe to everything we do.
And please
And a couple
give
of
us a
shout-outs.
review.
Go on, give us a shout
And
out.
reviews, right?
Yeah.
Shout out to Leo. Rang me after the grand final. Canberra Raiders supporter.
You're playing a song.
Hello, Tom's
mate.
playing the outro music already. Geez, talking about telling me to move on. Righto, Leo, very gracious a phone call. He's a Canberra Raiders who we knocked off in the first final.
We certainly knocked him off.
And then Chris from Dubbo also text to say, you know, congratulations, well done, Doggy supporter. Right, so
That's a shame, isn't it?
And I haven't heard from any Storm supporters.
No, I don't think we have any fans.
Well, who cares anyway? They're Storm people, right? They're losers.
See you next time.
Cheers,
people.
folks.
Cheers.
This podcast does not provide financial advice.